Have you heard the rumors that some age pension payments could arrive earlier this month? Before you make any plans, you need to know what's really happening, because thousands of Australian pensioners are asking the same question, and the answer could affect your budget, your bills, and your peace of mind. In today's video, we'll break down the latest age pension payment updates, explain any important schedule changes, and discuss the issues and challenges that could impact retirees across Australia. If you rely on the age pension or want to stay ahead of every payment update and policy change, subscribe now and join our community, because this channel is dedicated to keeping Australian pensioners informed with clear, timely, and reliable updates you won't want to miss. If you are an age pension recipient in Australia and you have noticed something a little unusual happening with your payment this month, maybe the money landed in your account a day earlier than expected, or your scheduled payment date looks slightly different from what you are used to, you are absolutely not alone, and more importantly, you have nothing to worry about. What you are experiencing is something that catches thousands of pensioners off guard every single time it happens. And today we are going to walk through exactly what is going on, why it happens, when it is likely to occur, what you should do about it, and how you can make sure you never get caught off guard again. So let us start right at the beginning, because if you have been receiving your age pension for a while, you already know that your payment lands in your bank account on a pretty predictable schedule. Centrelink processes most fortnightly pension payments on Tuesdays, and the money typically shows up in your bank account by Wednesday. That 2-week rhythm becomes second nature pretty quickly. You know roughly when to expect the money, you plan your grocery run around it, you schedule your bills, you might even treat yourself to a little something on pension day. It becomes part of the rhythm of retired life. And then one day, out of nowhere, the money arrives a day early. Or your MyGov account shows a different date than usual, and suddenly that comfortable rhythm feels a little off. What is going on? The answer almost always comes down to one thing: a public holiday. Services Australia, which runs Centrelink, cannot process and release payments on days when it is officially closed. That means national public holidays, and in some states, state-based public holidays, can push your payment date forward. And here is the key word: forward, not backward. Centrelink has a very clear policy on this. Your payment will never be delayed because of a public holiday. It will always be moved earlier, never later. So if your regular Tuesday processing day happens to fall on a public holiday, Centrelink will process it the business day before, typically the Monday. Your money might then arrive Monday night or Tuesday morning, giving you the slightly surreal experience of waking up to pension funds when you were not expecting them until the following day. Now in June, this is particularly relevant. June is one of those months on the Australian calendar where a public holiday falls right in the middle of the action. The King's Birthday public holiday, which in most states falls on the second Monday of June, meaning Monday the 9th of June in 2026, creates exactly this kind of scenario. With the 9th of June being a public holiday, any payment that would have been processed or due in that window gets shuffled. And because Centrelink always errs on the side of paying you earlier rather than making you wait longer, recipients who fall into that payment cycle will see their money arrive sooner than their usual Wednesday. It feels like a bonus. It feels like a gift. But here is something really important that we want you to understand clearly, because this is where people sometimes get into trouble. It is not a bonus payment. It is not extra money. It is your regular fortnightly payment arriving early. The amount is exactly the same. The next payment will still be due on its regular schedule 2 weeks from the original due date, not 2 weeks from when you actually received the early one. This distinction matters enormously for budgeting, and we will come back to it in a moment. But first, let us talk about just how widespread this issue is, because you might be surprised. There are currently more than 2.5 million Australians receiving the age pension. That is a massive number of people, and every single one of them is on a personalized fortnightly payment cycle. Not everyone's cycle aligns with the same Tuesday. Centrelink staggers payments across the fortnightly period to manage the processing load. So when a public holiday hits, it does not affect every single pensioner at once. It affects those whose specific payment cycle falls in the impacted window. If your payment day falls on or immediately after the public holiday, you will experience the early payment. If your cycle sits a few days clear of the holiday, you might not notice anything different at all. This is why you might have heard a neighbor mention they got paid early, while your own payment arrived on its usual day. You are both right. It simply depends on where your individual cycle falls in relation to the public holiday. And because the schedules are personal and staggered, the easiest way to check your own situation is always to log into your MyGov account and check your payment details through your linked Centrelink account. Once you are in there, you can navigate to Payments and Claims, then Payment History, then Future Payments, and you will be able to see exactly when your next payment is due and how much it will be. There are no surprises hidden in there. It is all clearly laid out, and Services Australia updates it in real time as dates are adjusted for holidays. You can also use the Express Plus Centrelink app on your phone or tablet, which is a really handy tool if you find logging into MyGov on a desktop a bit of a hassle. The app lets you check your payment details quickly, set up notifications, and even update your banking details if you need to. If you are not already using it, it is genuinely worth downloading. It takes a lot of the uncertainty out of managing your pension. Now let us talk about the broader picture of what is happening with the age pension right now in 2026, because there is quite a bit of good news beyond just the payment timing question. The age pension was indexed in March 2026, which means that from the 21st of March, payment rates went up. For a single person on the full age pension, the maximum fortnightly payment is now $1,200.90. For each member of a couple, it is $905.20 per fortnight. Compared to the previous rates, that is an increase of $22.20 per fortnight for singles and $16.70 per person for couples. When you annualize that, a single pensioner is now receiving approximately $31,223 per year from the age pension alone. These increases happen automatically. You do not need to do anything to receive them. If you are already on the pension and your details with Centrelink are up to date, the higher rate just kicks in on the new schedule. The indexation itself is tied to movements in two key measures: the Consumer Price Index, which tracks inflation, and the Pensioner and Beneficiary Living Cost Index, which looks specifically at how living costs are moving for people who rely on government payments. Centrelink takes whichever of those two figures produces the higher outcome and uses that to calculate the rate increase. The pension is also benchmarked against male total average weekly earnings, ensuring it does not fall below a certain percentage of average wages. So the system is designed, at least in theory, to keep pace with the real costs of living for older Australians. The next scheduled indexation review is September 2026, so you can expect another potential increase in the spring. There is also a lot of conversation happening right now around something called deeming rates. And if you have financial assets, things like term deposits, shares, or managed funds, this matters to you directly. Deeming rates are the assumed rates of return that Centrelink applies to your financial assets when calculating the income test for your pension. For a period, these rates were frozen, which was a significant benefit to pensioners because it meant the system was not counting income from assets that those assets were not actually generating in a low-interest environment. That freeze on deeming rates expired in June 2026, and there is now active debate about what the new rates will look like. A decision to extend the freeze would preserve current entitlements for many pensioners, while a return to market-linked rates could reduce payments for those with larger financial assets by hundreds or even thousands of dollars a year. This is something worth watching closely, and if you have a financial advisor, it is worth having a conversation about how any change to deeming rates might affect your specific situation. But let us come back to something really practical, because while the rates and the policy debates are important, the day-to-day reality of managing your finances on a fortnightly pension is where the rubber really meets the road. And this is where the early payment situation, which brought you to this video in the first place, can actually cause some real budgeting headaches if you are not careful. Here is the scenario that catches people out. Your payment arrives on a Monday instead of Wednesday because of a public holiday. You think, great, money is here, everything is fine. You spend it at the normal pace over the fortnight, but because the payment arrived 2 days early, the gap until your next payment is actually 16 days instead of 14. That might not sound like much, but if you have allocated every dollar of your pension to bills, groceries, medication, and other essentials across exactly 14 days, those extra 2 days can leave you in a tough spot at the end of the cycle. Financial advisors who work with retirees see this happen quite regularly, and the best advice is always the same. When you receive an early payment, Do not treat those extra 2 days' worth of money as something extra to spend. Park it mentally. Know that your next payment is still 2 full weeks away from the original due date, not from the day the early payment landed. One practical way to manage this is to keep a small buffer in your bank account, even a few $100s, that you do not touch for everyday spending. That buffer can absorb the occasional gap created by an early payment without leaving you short. It sounds simple, but it is one of the most effective financial habits a pensioner can build. Another approach is to set up automatic bill payments for after your regular payment due date, rather than the day your money arrives, so that even if payment comes in early, your bills are not pulling from that money before you have had a chance to account for the whole fortnight. It is also worth knowing that if you find yourself genuinely short between payments for any reason, there is a mechanism within the age pension system called an advance payment. This allows eligible pensioners to receive part of a future payment early, in a lump sum, when they need it for a particular expense. You repay it gradually over subsequent fortnightly payments. It is not free money. You are effectively borrowing from your own future pension, but it is a legitimate safety net when an unexpected cost comes up. You can apply for an advance payment through your MyGov account or by calling Centrelink on 1-32300. Let us also talk about who this early payment situation affects beyond just standard age pension recipients, because it is not just about one payment type. If you receive the disability support pension, carer payment, or any other Centrelink income support payment, the same rules apply. When a public holiday falls on or around your payment date, Centrelink will move it earlier. The same goes for DVA pension recipients, that is, payments from the Department of Veterans Affairs. If you are a veteran or the partner of a veteran receiving a DVA income support pension, your payment dates are also affected by public holidays in the same way. And for those of you who may be on a monthly payment schedule rather than fortnightly, some recipients opt for this, particularly for certain supplementary payments. The same principle holds. Monthly payments that fall near a public holiday will be brought forward. The schedule for monthly payments in the 2025 to 2026 financial year runs through to the end of June, with the June monthly payment falling on Friday the 26th of June, 2026. Now, one more thing that is worth clearing up, because it causes confusion every time. When Centrelink says your payment date has moved because of a public holiday, what they mean is the date they process and release the payment from their end. The date the money actually appears in your bank account can vary depending on which bank you use. Most major banks will credit the payment on the same day Centrelink releases it, or the following business day. But some smaller banks or credit unions may take an extra business day or two to process the incoming transfer. So even if Centrelink releases your payment on Monday to account for the Tuesday public holiday, you might not see it in your account until Tuesday or Wednesday, which in some cases means there was no effective difference from your perspective at all. This is why it is always a good idea to check MyGov rather than just watching your bank balance. MyGov will show you the date Centrelink is processing your payment, which gives you the most accurate picture. On the topic of staying connected and informed, it is genuinely worth making sure your MyGov and Centrelink accounts are set up properly and your personal details are current. This means your banking details, your address, your relationship status if applicable, and any income or assets that you are required to report. When things change in your life, even small things, keeping Centrelink updated is important because outdated information can lead to either underpayments or overpayments, and overpayments create debts that you will eventually have to pay back. Centrelink is generally quite understanding about honest mistakes, but it is always easier to keep things current than to sort out a discrepancy after the fact. If you have not checked your eligibility for the age pension recently, or if you have not reassessed whether you might now qualify for a higher rate, or even for the pension for the first time, it is worth doing that too. The March 2026 indexation also brought with it changes to the asset test thresholds, the cutoff limits above which your pension reduces or stops. With those thresholds now higher, some Australians who were previously just over the line may now qualify for at least a part pension. Even a small part pension can be valuable, not just for the money itself, but because pension recipients are typically eligible for the Pensioner Concession Card, which unlocks discounts on medications, utilities, public transport, and a range of other services. Approximately 1 in 3 people who check their eligibility with Centrelink end up qualifying, and a large proportion of those were not previously receiving any Centrelink benefits at all. So to bring everything together, if your age pension payment arrived early this month, now you know exactly why. It is because a public holiday fell on or near your regular payment processing day, and Centrelink's policy is always to pay you earlier rather than make you wait. The amount is the same as always. It is not a bonus. Your next payment is still on the regular fortnightly schedule from the original due date. Budget accordingly, keep a small buffer if you can, and use MyGov or the Express Plus Centrelink app to check your specific payment dates whenever you are uncertain. The age pension system can feel complex and sometimes a little opaque, but it is more responsive and more transparent than many people realize. Centrelink genuinely does communicate schedule changes. They update the information on the Services Australia website, they reflect it in MyGov, and they provide tools to help you plan. The more familiar you become with those tools, the more in control you will feel over your own financial situation in retirement. And if you have any lingering questions about your payment amount, your eligibility, your reporting requirements, or anything else, the Centrelink Older Australians line is available at 132300. It can get busy, so if you can call right at 8 a.m. when the line's open, you will have the best chance of getting through without a long wait. Thank you so much for watching. If this video helped clear things up for you, please give it a like and consider sharing it with a friend or family member who might be in the same situation. And if there is a specific aspect of the age pension you would like us to cover in a future video, whether it is the deeming rate changes, how the assets test works, what happens when you travel overseas, or anything else, drop it in the comments below. We read every single one, and your questions help shape what we cover next. Until next time, take care of yourselves, and we will see you in the next one.